Hey guys, Stock Saturday, and it's a slightly down week. Finally, been waiting for this for a little while. Probably not over, I would imagine. Sort of having a bit of a pullback on the crypto side, and certainly gold and silver. But the sort of other stocks are doing reasonably well. Nasdaq and S&P sort of pushing up to all-time highs. You got the S&P 500 up 1.15% in the last 5 days, and the Nasdaq up a smaller amount, 0.47%, although it sort of had a huge spike up on Thursday. But yeah, it sort of dropped down and not quite as much up on the week. But yeah, certainly doing reasonably well. Of course, me not being in big tech, this has sort of not given me quite the move, but I've had some greens. Broadcom almost at 1300 now. I think it did touch 1300 briefly. Stellantis 2651, very nice. That's sort of 80% in profit now, including the FX gain. So yeah, not too bad. 130 nearly on TSMC. And the Vanguard Emerging Markets is sort of going into profit with sort of, I think, a little bit of China recovery and some of the other countries doing quite well. I think India sort of pushing that ahead partly. And then, yeah, some of my others sort of haven't been doing quite so well. Glencore sort of struggling, Vale and Himax certainly, but yeah, can't win them all. So just do a couple of earnings this week, sort of spread them out a little bit and sort of follow up on some of the others in the next month. Equinox Gold released theirs and it sort of dropped quite a bit on the news. It doesn't look sort of all that promising. I'm guessing people were hoping for a little bit more, but certainly sort of forecasts of 660,000 to 750,000 ounces for this year. I think people were hoping for quite a bit more than that, with Greenstone sort of pretty much online in the next month or two. But yeah, it's hopefully sort of 2025 is going to be better. And even, 2024, we could get a rise in gold price. And, if they say 700,000 ounces is still a really good amount of gold. But all-in sustaining cost of 1,657 is obviously quite high. So with that and all the admin costs and everything on top, that doesn't really give a huge amount of profit. They've shown a net income of 3.9 million. Obviously, that's partly because of the investment. This is up to end of December. Just sort of coming down to their summary. So yeah, gold produced 155,000 compared to 149 previous quarter, but pretty much the same as last year as well, 150,000. On the year, it's up 32,000, so not too bad. And all-in sustaining cost is up slightly since last quarter, and obviously up a fair amount since last year. So yeah, they're showing 3.9 million net income, where sort of last year they weren't spending quite so much, and they show 22.6 million. And you get all the sort of adjusted numbers and that sort of thing. I don't take too much notice of those. Adjusted EBITDA are all, adjusted EPS and that sort of thing are all non-IFRS measures. It's sort of when they're trying to make the figures look a little bit better. I think you might as well just admit the truth and, say you've been spending a lot of money and things will look better sort of for the year going forward. But yeah, not too bad. Cash and cash equivalents, 192 million from 356 last quarter, so they have spent quite a lot. Net debt up to 733, so only up slightly. And then I think, as I say, it's the guidance that has most likely sort of hit people and caused the price to drop. I think people were hoping for a little bit more than this. Greenstone, the new mine, obviously in Canada. That's sort of quite nice to have, Canada and US mines. And yeah, they're looking at 105 to 125,000 this year. Obviously, that would be more in a full year with full 12 months of operation. So next year should be better. And yeah, all-in sustaining cost of between $840 and $940. So it's an incredibly profitable mine. That's good. And they're expecting 95 million more in non-sustaining expenditures. And then they give you all the other figures for their other mines. So looking at, as I say, 660 to 750. Obviously, these are all reasonably wide guidance ranges. Some of them 20,000 ounces apart. And cash costs and all-in sustaining costs. Sort of, we were hoping, a full year, almost a full year of greenstone mining would be bringing this all-in sustaining cost down, but it's sort of on the high end, projected to be higher than this last year, at sort of 1630 to 1740 on all-in sustaining cost, where if you're doing sort of 125,000 at $900 all-in sustaining cost, that's not great. But the Mexico mine is 2090 to 2190, so that's above the gold price. That's a loss-making mine. And then Castle Mountain in the US, 2125 to 2200. So not good at all. And the Brazilian mines all in the sort of high range, not really making all that much. So yeah, it's slightly poor guidance, but it just means it'll be even more leverage to the gold price. If we start going to 2200, 2300, 2500, as a lot of gold bulls are saying, then all of these unprofitable mines, or certainly the Brazilian ones, suddenly become quite profitable. And just showing that net debt breakdown. So current debt has gone up ever so slightly. Long-term debt has come down quite a bit, and cash has come down a similar amount. So we're just up 3.5 million on net debt. So not a really huge amount of change there. So moving on to Coeur mining, they are looking slightly better and sort of have performed a little better on these results. Strong fourth quarter drove significant increases in revenue and adjusted EBITDA. Production increases at Rochester and strong finishes at Kensington and Wharf drove a 35% increase in revenue and a more than doubling of adjusted EBITDA quarter over quarter. So quite nice. Coming down to, they do a to be fair, it's a big table of numbers, but it's a lovely breakdown. I think they show sort of all four quarters individually, and then the whole of 2022 and the previous quarter of a year ago. So I do like that breakdown rather than just sort of showing 2 quarters. So as they say, fourth quarter revenue increased to 262 million, up from 194 and up from 177 in the second quarter. So that's quite good. Obviously, they're still spending rather a lot of capex, 92 million in capex, down slightly from 112 million, and this should start to reduce with the Rochester expansion sort of coming to an end. And then yeah, they show this adjusted EBITDA figure of 64 million, up from sort of 30, 22 second quarter. So not too bad. Total debt up to 545 million. So that's up a reasonable amount, although not really up too much from this quarter last year, actually. And all in, still would prefer to see all in sustaining cost, but costs applicable to sales per gold ounce 1355 and per silver ounce 1810. So gold's obviously a lot better than the silver costs there. With silver at sort of $23, that's not too much above that, and sort of obviously admin and general costs and capex and everything, that sort of makes their silver mines not too sort of profitable, but the gold side not too bad. So just coming down all the way to the guidance, because that's what everyone is going to be looking at. the gold 2024 guidance, 310,000 to 355. I think that's quite a decent number, and 10.7 to 13.3 million on silver. So lovely numbers, I think, especially with the costs not looking too bad. 1,200 to 1,400 on gold for Rochester, and 14 to $16, and yeah, 1650 to 1750 on Palmarejo, and yeah, overall, pretty decent cost breakdown. And then, as I say, capex has sort of come down a reasonable amount. Sort of forecast for 2024. Take the mid-range of that, it's looking about 250 million, including sort of the final expansion costs. So compared to 360 million in 2023 and 352 million in 2022. So if we get hopefully rising metal prices and reducing capex, that should be pretty good. So not much in the way of economic news really this week. Sort of had a little bit of PMI data for the UK, for all sort of provisional and bit of a mixed bag. Manufacturing looking awful, but composite 53.3, so not too bad. Services 54. And then EU inflation sort of pretty much well, exactly as expected, sort of down on the month, but 3.3% core year-on-year figure, slightly down from last month, 3.4. So yeah, fair enough. US jobs data sort of still looking strong. Initial and continuing unemployment claims both less than expected and quite a bit down on last month. So yeah, and that was about it for the news. So portfolio-wise, CleanSpark has obviously dropped back a little bit with the slight drop in Bitcoin price. I think people are getting a little bit worked up. You know, if it sort of comes back to 45, 40 maybe, then you know that would be sort of a proper pullback. But coming from 52 and a bit to 50 is not really a pullback. So we'll have to see. Obviously, this will move, you know, 50%, 100% at a time, with sort of $5,000 move in the Bitcoin price. So yeah, for now, still expect a huge amount of volatility. But yeah, gold and silver stuff coming down as well, sort of contributing to this red week, and REITs not really doing a huge amount. My Pan American and KGHM sort of not really doing all that much. Well, KGHM sort of holding in the 110 range. Pan American still coming down below $13 now. So yeah, I'll have to start taking a look at that. I'll probably have a look at the earnings at some point. So interesting, and I couldn't actually log into Interactive Brokers because they were down for maintenance, but I did see the total roughly at the end of last night, and this is sort of pretty much where it was. Chinese tech sort of barely moving. It's really all about the options at the moment, and I did add a little, added some more Equinox options and a little bit more Himax options. I'm starting to have a slight worry that Himax sort of are going to be part of this China decline, and sort of obviously a lot of their business is in China, and you know maybe they won't do sort of what I've been expecting, and I may have sort of thrown away about £3,000 that I think I've put into those options. The stock might be okay if I sort of hold the stock for 3, 4, 5 years, then it could do well, but sort of betting that it's going to do well by the end of next year could be a bit of a risk. Obviously, I always knew this, and yeah, similar to sort of crypto, really. I could have put sort of 10, 15,000 into a crypto and it died, and I would have lost 15,000. So I still think the risk reward on these is very high. I mean, similarly with Equinox, it's dropped back down to $4.22 now. I'm sort of betting on it being over 10, so that is quite a move for it to make over the next year. And obviously, if it just goes slightly above 10, that wouldn't really make me much of anything. I really sort of need it to go to 15, if not 20. So that really wants sort of the $2,500 gold move that people are talking about, ideally sort of in the next year, maybe year and a bit, to hopefully give some time for the results to come through, and they'll be showing a huge amount of profit. But yeah, it's a bet. I'll have to see how they go. It's still kind of where I'm wanting to put my money, but I'm not absolutely piling in at the moment. Just sort of banking up a bit more cash. I do have 1,100 pounds still to buy in the Interactive Brokers account, but I have sort of got another £2,000 that sort of, if I'd have used this up, I could have been putting in, and I'm just leaving it out at the moment, sort of building up a bit of a war chest if we do have a crash. So that's it for the week. Let me know how you guys are doing, if you're buying anything, if you're sort of in on the Nvidia crazy run up, and yeah, like and subscribe. See you soon.